Oil cooled down, tech heated up, and Wall Street suddenly found a little bit of confidence again. Hey everyone, it's Wednesday morning, May 27th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So yesterday, U.S. stocks moved higher overall, even though the picture was not completely clean across the board. The Dow Jones Industrial Average slipped 0.2%, but the Standard & Poor's 500 gained 0.7% and closed at a fresh record high. The Nasdaq Composite was the clear winner, rising 1.2% and also hitting a new high. And, well, the big driver was once again tech. Micron jumped around 20% and reached a market value of $1 trillion for the first time. That kind of move definitely helped lift sentiment across the broader tech space. Now, another important factor was oil. Investors were relieved to see crude prices pulling back, especially after the recent spike caused by tensions between Washington and Tehran. West Texas. Intermediate crude fell 3% to $93 per barrel, while Brent traded close to $97 per barrel. U.S. oil also dropped 8.4% last week, which was its sharpest weekly decline since mid-April. And this matters because lower oil prices can reduce some pressure on inflation expectations. But of course, the situation is still very fragile. President Trump said talks with Iran were moving along well, which gave markets some hope that diplomacy could still prevent a bigger escalation. At the same time, he also made clear that the U.S. was still ready to act militarily if negotiations failed. And even after the U.S. and Iran exchanged fire in the Strait of Hormuz, stocks stayed higher. So, markets are basically saying, yes, the risks are still there. But for now, investors are focusing more on diplomacy, lower oil prices, and the strength in tech. Still, the Fed story is getting more complicated. Because energy prices remain elevated, traders are now pricing in an 8.5% chance of a Fed rate hike in July. 1 month ago, that probability was only 0.9%. So, the takeaway is pretty simple. Tech is carrying the market, oil is giving investors some breathing room, but geopolitics and inflation are still very much in the background. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.